Home ownership has been the cornerstone of the American dream for decades. But for millennials and Gen Z, that dream seems to be slipping away. Today, we're breaking down why a generation may never buy a home and what it means for the housing market. So, I'm going to ask this question. Why is home ownership becoming so out of reach for a lot of young people? The challenges are stacking up. Housing prices have outpaced wage growth. This is the single most significant issue. For decades, the gap between what people earn and what a home costs has widened to historic levels. In 1985, the median US home cost about 3.5 times the median household income. As of 2025, that ratio has soared to approximately 5 times that, and it's even higher in major metropolitan areas. For example, in some cities, the median home price is over 10 times the median income. This affordability gap means that even with a healthy income, a young person's wages simply can't keep pace with the rise in property values. High interest rates are making monthly payments harder to afford. Current mortgage rates are significantly higher than the near record lows we seen just a few years ago, adding thousands of dollars to the total cost of a home. The average 30-year fixed mortgage rate, which was around 3% in 2021, has risen to nearly 7% or more. This increase drastically raises monthly mortgage payments, making it harder for first time buyers to qualify for a loan and pushing many out of the market entirely. The catch 22, even though home prices have cooled off a bit in some areas, the higher mortgage rates mean that monthly payments on the home is often still more expensive than it was when prices were at their peak. Student loan debt eats into down payment savings and raising debt to income ratios, and that has a compounding effect on a young person's ability to buy a home. The weight of monthly student loan payments makes it incredibly difficult to save for a down. A borrower's debt to income ratio to determine how much they can afford to borrow. High student loan payments can push this ratio above a lender's acceptable threshold, disqualifying otherwise credit worthy buyers. Also, lifestyle shifts like delaying marriage, starting families later, and valuing flexibility over long term roots. If younger generations can't buy homes, the effects go far beyond the individuals. You know, it will. What's going to happen is you begin to see less wealth building through home equity, a growing intergenerational wealth gap, less community stability and local economic growth, more pressure on already tight rental markets. There's still hope, but it'll take some action. And type of action that's going to be needed is, we're going to need affordable housing initiatives and zoning reform, down payment assistance for first-time home buyers, student loan relief to free up income for housing, innovative options like co-ownership and shared equity models and community land trusts. Home ownership isn't gone for millennials and Gen Z, but the path is tougher than ever. And if you're planning to buy in the next few years, strategy is everything. I'm Corey Meeks, your Austin, Texas real estate agent. Make sure to hit like and subscribe for tips on navigating today's market. And I'll see you in the next one.